whoa. Okay. So we are live. Yeah, we're live. What I'm doing now is I am getting the chat. About chat. Boom. And then what we're doing is we're going to the chat, properties, copy and pasta. There we go. I. So let me also copy and pasta this into the Discord. Shit, son. Damn, we're talking philosophy. I like that. I like that. I like that. Big up, Emery, man. Big up. Big up. Right. So, we are entering into more revision right now. We've just been we've been smashing this revision, mate, and honestly, I am so happy to be doing this as well. I, it's like a subconscious thing where I don't want to be doing this, and every time I do it, I don't feel like I'm doing much. But then the next day, I've got these thoughts in my head about the lesson that we've gone over. It's all it is that you need to spend time doing whatever it is over and over, and you just the input that you're putting in your mind has nothing else other than what you're putting in it. So if you spend your time revising, putting effort into trading, then you're going to get tangible results. It's the time, the experience, which creates wisdom that makes us good at whatever craft, whatever skill that we're trying to hone. Okay, so we are in Wednesday. Holy shit, these days feel strange. But what I was thinking about just now, this morning even, was how long am I going to be doing this? Because if I'm happy doing this and I'll be doing this for a couple of years, going over this revision, not so often at times. I probably went. There was a point where I might have gone 6 months without doing any revision whatsoever. And the thing is that when I do revision, I actually get my reticular activating system just revises. It remembers stuff, whether I want to remember it or not. And so that's why it's so powerful. And I think, mate, we might be doing these revision sessions every day for another year, mate. We could be doing this for a year, just because if we go over this for a whole year, it's not even gonna be a problem. It's gonna be fun. It's gonna be something which is gonna actually change the trajectory of my future in trading. And as we know, trading and life are basically the same thing. So yeah, I look forward to improving everything basically. So yeah, let's start getting into this. I've got a pen and notepad for anything that needs to be, anything that I want to go over, anything that sort of rings a bell that hasn't been wrong before. There are definitely so many things which I'm learning still, like fractal structure, flip zones. Flip zones are strange because they are internal, you get a market shift, it comes down, creates a higher low, and that's a flip zone. and that was something which I found really difficult to understand. But no, we're more intelligent, and we just got to keep going over these lessons, mate. So let's begin. We're going into multi-time frame supply and demand concepts. Last time we were just going over institutional zones, or this whole thing is actually called institutional zones. What we were doing last time was we were going over supply and demand and market structure, and then we were looking for the two main things that are our main structural confluences for supply and demand zones, which is either a break of structure or an institutional market shift. And the institutional market shift that's what creates those flip zones. The key word is institutional. There's a big difference between a market shift that hasn't got enough momentum and an institutional backing behind it, which is actually quite evident to see. You'll see massive momentum. Alright, so let's begin. I need to put on headphones. Before we put on the GOH, the BRAD. But yeah, another thing is that like, holy shit. How do I fucking, do I need to move this even further? Yeah, I need to move that further. And then, yeah, we can just sit to the side. We might need to put this a little more to the right. Alright, great. So let's begin with the BRAD. But yeah, like I was saying, the more I like invest my like attention into Brad, like in all that he's doing, the less I like him. So as long as I stay on these lessons, all is well. And the odd, live trading sessions, see what he's up to. But all his newer videos, like, oh look at me, I'm on a private jet with my people, all my fucking hardworking people. It's like, bruv. I'm in too deep. I don't need to be going into your whole life, bro. It just makes me feel bad. Comparison is the thief of joy. Let's go into these lessons. Let's focus on being better, and let's get to the level that Brad is at, which is, thousands, hundreds of thousands of pounds, which is like, that's the goal, really. All right, let's begin.
Okay, so this is supply and demand with types of structure. If you recall in the mechanical market structure lesson, we talk about how there's three types of structure, your swing and internal and fractal structure, right? And this is when we look at some examples. And if you look at this is pretty much the same example that you saw inside the types of structure lesson. Only this time round, we have added in the supply and demand zones. And really all the supply and demand zones does is that it tells us, or rather it signal to us, when price is going to start shifting from bearish to bullish, bullish to bearish, when the swing pullback is going to start, when the internal pullback is going to start, when it's going to end, etc., etc. And if we can combine the supply and demand zones with our market shift and our fractal market shift, it allows us to time this swing pullback and internal pullback starting and ending much accurately, right? So it kind of demand zones with our start shifting from bearish to bullish, bullish to bearish, when the swing pullback is going to start, when the internal pullback is going to start, when it's going to end, etc., etc. And if we can combine the supply and demand zones with our market shift and our fractal market shift, it allows us to time this swing pullback and internal pullback starting and ending much accurately, right? So it kind of allows us to predict when the swing or internal pullback is going to start happening and when it's going to ending by looking at these supply and demand zones. That is why I always say supply and demand, they both come hand in hand. You need to combine both of them together, right? I mean, supply and demand and market structure. All right, if not, this might look complicated, but we're gonna eat this elephant piece by piece, right? Break this entire elephant down to different parts. So let's go through step by step. All right, first of all, price is in a bearish swing structure. So we know that because price goes down, push up, and then go down even further, breaking through the last swing low that we have, right? Creating our bearish break of structure. When there's a bearish break of structure just like this, we got our strong high being formed. Why is this high strong? Because this high led to price breaking past this weak low. Okay, so strong high, weak lows, bearish swing structure, and since price is in a bearish structure, we know that supply is in control, which means that it's going to be a supply zone right here. All right, there's a supply zone. This supply zone caused price to break structure, making this an institutional supply zone. So right here, strong supply zone that we have. Okay, cool. Next, after break of structure, what are we doing? We are expecting price to start pulling back. Okay, we are expecting price to start pulling back. And when is price going to start pulling back? In the market structure lessons, we learned that price will start pulling back when we get a fractal market shift. When we get that market shift in price that tell us that price has turned from bearish to bullish, and the internal structure is going to start pulling back, and then it's going to lead to the swing pullback happening. But right now, since we have learned supply and demand, we have learned that okay, if we look towards the left hand side and look for any price action, if there is an unmitigated demand zone, price could potentially react from the demand zone, and that is when we get a pullback start to happening. So once again, we want to look for any sort of unmitigated demand zone on the left hand side. I mean, the demand zone, it can be mitigated and it can still work, but once again, unmitigated demand zones are the ones that is much more stronger and have a higher chance of working. But like I said, demand zones that have been mitigated, some orders have been utilized, they can still work. They are still considered as valid. So basically look towards the left, find any sort of demand zones, and that is when we know that if price tap into the demand zone, demand gonna enter into the market, buyers are gonna come in and push the price up, and that is when the pullback is gonna start happening. Okay, so this is when you can see in this case right here, if we draw it up, price continue to go down even further, create pullback a little bit, minor pullback. If you compare this pullback to this pullback right here, this is just a minor internal structural pullback. So if we just purely look at internal structure perspective, this would be the internal lower high, right? Internal lower high right there. Okay, and then price goes down even further, and then there's a fractal pullback right there, and it led to a fractal market shift. At where? At the demand zone. So at this point of time, you can look for your buy position. But bear in mind, you have to manage your expectation because right now, price is still bearish. Why? Because price has not given us a market shift yet. Price has not broken past the last internal lower high, which means this is the internal range that we are playing within. And it means price can do whatever it wants right here. It can come all the way up here, respect this last internal lower high, and then still go down even further, continue going down even further. So that is when, like I said, you're gonna manage your expectation, right? All this fractal market shift does is that it signal to us that the internal structure is gonna start pulling back. It has not tell us that the swing pullback has started yet. So this is when you get the fractal market shift, and then you got you see price start coming up here, and then you see this supply zone. If this supply zone were to do its job, guess what? Supply will step into the market, overpower the demand, and cause price to go down even further. But this supply zone failed. It failed to do its job. So that is when it led to price creating the market shift, right? This demand zone that we have right here, it was so strong that caused price to push all the way up there, breaking past the last internal lower high, giving us our market shift. So at this point of time, when we get a market shift, the bullish market shift, this tells us that the swing structure is going to start pulling back. So we're going to turn bearish, we're going to turn bullish for a short amount of time to facilitate the swing pullback. So this is when the bullish market shift happened, this internal supply zone failed to do its job, and then right now the internal structure is now bullish. And like I said, this is where the swing pullback has started. So based on this, when price created this market shift, there was a demand zone being formed right here, right? There's a demand zone being formed right here. This demand zone led to price creating the abrupt market shift. So we know there's a lot of institutional activity right here. And then sometimes it might not look like a straight move like this. What I mean by that is that sometimes within this straight move, price goes up, pull back a little bit before eventually creating the market shift. In that case, guess what? We will have one demand zone right here and another demand zone right here. Okay, so next thing, after the market shift, we are expecting price to start pulling back, right? And price is going to pull back to either one of these zones that we have right here. So in this case, it was just a straight push, so we can expect price to pull back to where? It's going to pull back to the demand zone that led to this market shift. So based on this, right, price eventually pull back to this demand zone that led to this market shift, and maybe perhaps you can see like a fractal market shift that tell you that this internal pullback is over, right? Right now, we're going to continue with the bullish internal structure, the bullish swing structure, internal structure, yeah, we're going to continue going up. So this is when you can look for buy position, right? And this is where you are trading counter trend, right? You are trading counter the swing trend, trading against the swing trend, but you are trading with the internal trend, right? Which is bullish, all right? So this is when, bear in mind, you need to be aggressive because, like I said, you are trading against the swing structure. You never ever know when price will start to create that lower high and just go down even further. So that is when, if you do want to enter for a buy right here, you must be aggressive, and I will advise you to target the weak highs. That means all of these weak highs, because our expectation is that in this bullish internal structure, price will come in here and break through these weak highs, right? Or you can target premium supply. That means if we draw the premium and discount to from the swing high to the swing low, this is above the 50% level. So we can expect price to pull back to this premium pricing within the swing structure, right? And then start to create the lower high and then go. So that is when you can either target weak highs or the premium zone, and especially the supply zones that we have on the premium zone. So example, in this case right here, let's say this was not a straight push, price actually did this, right? He actually did this before going even further. In that case, this is the extreme supply zone, and then there's another supply zone that we have right here. So if you do enter for buy right here, you have two choices. Either you can target this weak high, or you can target this, this supply that we have on the left hand side. Alright, and then that is when price goes up even further, and then price pull back, and then goes up there, and eventually it reaches our extreme supply zone, right? The extreme supply zone that created the break of structure in the first place. And bear in mind, this is really the extreme point, right? This is the last lower high in a swing structure, and this will be the last line of defense for the swing structure to continue bearish. So if price were to continue bearish like this, creating lower highs and lower lows, price must respect this last lower high. So this is when, since this is really the last line of defense, right, you can be more aggressive to look for sell-ups right here at this point. But be careful, because if you think about it, if you try to enter for sell right here, you are going against the internal trend. Because right now, if you look at the internal trend, price is what? Creating higher highs and higher lows. So if you do enter for sell right here, be careful, right? Because we have not gotten that market shift yet. We have not gotten that fractal market shift that confirmed to us that this internal structure has turned bearish, and right now the swing pullback is over. So that is when later on we are able to actually get that fractal market shift right here, where price broke past the fractal low or internal low, whatever, and then it led to price pulling back up to here, to this supply zone that created this fractal market shift, and then that is when you can look for your entry, short it all the way down there. And when this happens, this is where it led to a bearish market shift, and this internal demand zone that we have right here that was created, and this higher low right here, it failed to do its job, right? And that is when right now we are aligned with the swing structure. Price is bearish on the internal structure, swing structure is bearish, everything is bearish right now, and right now is the bearish expectation of order flow, which means we can expect price to start creating lower highs and lower lows on the internal structure, and we can expect supply to be in control of price, right? So previously, inside this internal structure, you can see there's a little bit of demand in control, right? But later on, when we get a market shift, this is when supply comes back and overpower demand, and supply is in control right now. So based on this, that is when price actually created this market shift right here, guess what? There is your entire supply zone right here. So we can expect price to pull back to that supply zone after that market shift. Right from it, this is when you can look for your highest probability trade setup, right? Because we know that fractal internal swing structure, they are all aligned to bearish, and right here, supply is in control. So we can expect price to mitigate this supply zone and move down even further. And then when that happens, another supply zone is formed, right? That led to this internal break of structure, and then you can wait for price to pull back there again. And that is when you can look for your another sell position and short it all the way down. So that is basically your supply and demand plus type of structure in like a bearish scenario, right? If you really look at this, once again, keep things very simple. All the supply and demand zones does is that it tells us exactly when this type of thing is going to happen, when the structure is going to shift, when supply is going to step.
S&D zones indicate when price is going to shift. Indicate. They are an indication.
Or when demand is going to step into market and cause price to turn from bearish to bullish or bullish to bearish, vice versa. So it's a very good or rather useful tool to actually use in our arsenal to really predict when this turning point is going to start happen, and that is when we can really look for our optimum trade entries. Okay, so if not, then yeah, we'll look at two more examples, right? We'll look at a few more examples. Okay, this is where we layer in the multi-time frame concepts. Once again, you want to keep things simple. So when we look at this, right, it's basically your swing structure, right? It helps if you just look at this purely from the swing structure perspective, right? It's just different time frames, but it's all swing structure, all right? So let's do this one step at a time. So based on this is pretty much exactly the same scenario as what we have just went through so far. So I'm not going to go too in-depth into this, right? But what we have is that these thick black lines right here, these are the higher time frame, and we are going to be utilizing the daily time frame as our higher time frame, and then these thin black lines that we have in the middle right here, these are our medium time frame, and this is our 4-hour time frame, and then on the red lines, this is our lower time frame, our 15-minute time frame. And based on this 3 time frames, remember we are only going to be using 3 time frames. Higher time frame to build that narrative to identify the overall trend direction, And then we'll go down to the lower time frames for increased accuracy and better timing. And then we will really go down to the lower time frame to really look for our trade entries. Alright, and like I said over here, like a little tip for you, when in doubt, just zoom out to the higher time frame. And always remember that higher time frame is king. So whenever you are trapped and you feel overwhelmed, you don't know where price is going, just zoom back up to the higher time frame. Go to the daily time frame, go to the 4-hour time frame, and you will gain so much more extreme clarity and confidence. And then, yeah, never ever start off the lower time frame. Always start on the higher time frame and then work your way down. Okay, so if not, let's go through this. So over here,
Sure.
price was going down, right? Swing structure is bearish. Okay, instead of calling it swing structure, I'm just gonna call it based on the time frame. So the daily structure is bearish. Alright, we got the bearish break of structure. That is when we can expect the daily structure to start pulling back soon, right? But where it's gonna start pulling back? When price encounters some sort of demand zone on the left hand side, right? So that's when price eventually come down here. We encounter a demand zone on the left hand side on the daily time frame. Now before this demand zone, there was actually a supply zone being created on the daily time frame. After, right here, supply step into the market to cause the daily break of structure. So this is our supply zone, right? Our daily supply zone, and then price eventually come down here, mitigate this daily demand zone, and that is when we have buyers stepping into the market and start pushing price up, right? And this is when you can expect the daily swing pullback to happen after daily break of structure. And when price mitigate this daily demand zone, remember, we want to get that fractal market shift, or we want to get that market shift that tell us that the swing pullback is going to happen. So later on, price goes up there, break past the last internal lower high that we have right here, right? And then that's where we get the market shift that tell us that right now price has turned bullish to facilitate that daily pullback. Okay, so the 4-hour time frame is going to switch bullish first to facilitate that daily pullback. Alright, and before that, you probably see the 15-minute time frame right here. The 15-minute time frame may look something like this. It's going to switch bullish first, right? Where we get a market shift on the 15-minute time frame, and then it led to the 4-hour time frame switching bullish to facilitate that daily pullback. Remember, the market is fractal. Whatever happens on the higher time frame must first happen on the lower time frame, and the same patterns repeat themselves over and over again through the course of time, right? And if you do enter for a buy, let's say right here, right, there is nothing wrong with that, but just be careful, because right now, remember, the daily structure is still bearish. That is why if you do enter for a buy right here, immediately you want to target the supply zones that we have within the premium pricing, because our expectation is that price is just turning bullish to facilitate that pullback into the premium pricing, and before price goes down even further. So based on this, eventually price goes up there, okay, cool, and then comes down here. After this market shift, you can expect price to actually start pulling back to our demand zone, right? Our demand zone that actually created this market shift. So this would be the 4-hour demand zone that actually led to this market shift happening right here. And also this 4-hour supply zone, it actually failed, right? So remember, right now internal structure is bullish, so we can expect demand to be in control. So that is when after this market shift, price pull back to this 4-hour demand zone, and then this is when you can jump down to the 15-minute time frame, look for your entries. And how you look for your entries is that you want to see this internal pullback to be over, right? You want to see the internal pullback, right? Over here, switches bullish, I get the market shift on the 15-minute time frame where price broke through the last 15-minute lower high, market shift, and then price step in to mitigate this 4-hour demand zone. Demand step into the market, shift in structure, and this tell us that okay, this is the right time where we can actually enter for a buy position. Now, bear in mind, like I said over here, this is counter the daily trend, because the daily trend is bearish, but it's pro our 4-hour trend, right? Our 4-hour trend is bullish, so we are trading with the 4-hour trend, but we are trading against the daily trend, which is why we want to trade this with the objective that what we are trying to do here is just to play the daily pullback into supply zones in the premium pricing, or the wick high that we have right here. So you can either use this to target this wick high, or target this supply zones that we have within the premium pricing, alright, and then eventually price goes up there, and you can see the moment price crossed the 50% equilibrium level on the premium discount, right, that is when you need to start to anticipate, or rather expect price to actually start turning bearish, right, and just go back down. So the moment price comes up here above the 50% equilibrium, you must ask yourself, okay, where is price going to pull back to? And most likely it's going to pull back to either one of the supply zones that we have within this premium pricing, right? There's one here at the extreme end, and there could potentially be another one right here. If we see there's another, maybe there's a 4-hour supply zone right here, because there's a 4-hour lower high being formed before price actually went on to do a daily break of structure. So in that case, there could potentially be another supply zone right here. So yeah, then we got a supply zone, and then that is when price finally come up to this extreme daily supply zone. And like I said earlier right here, this is the last line of defense for the daily swing structure to remain bearish. So this is when you can be a little bit more aggressive right here to look for a sell setup, and eventually price mitigate from this daily supply zone, supply step into the market and cause price to move down, and eventually it comes down here and break past the last internal higher low. Now when it break past the last internal higher low, it tells us that internal structure has officially shifted from bullish to bearish, and right now the 4-hour structure it's aligned with our daily structure, right? And this is pretty much tell us that the daily pullback is over, right? And this is when we get confirmation that tell us that price has officially turned back bearish and we're going to continue heading down. So this is when you can potentially draw a premium discount from this internal high to this internal low. And where can we expect price to pull back to? We can expect price to pull back after you created this market shift. It's going to pull back to a supply zone that is within the premium pricing, right? Bear in mind, it doesn't always have to, right? It can just come up to this equilibrium that we have right here and then just goes down, right? It doesn't have to pull up to this supply zone, but there's a high chance that it's going to pull up to some sort of supply zone that is within the premium pricing. So over here, this is the premium zone, right? And then you can see this is the supply zone that led to this market shift being created. So this is when we can expect price to potentially pull back to this extreme supply zone, tap into it, and go down to the 15-minute time frame, our lower time frame, look for our entries. We can see the 15-minute structure could be creating higher highs and higher lows to facilitate that internal structural pullback, right? And then all we need to do is to wait for the 15-minute time frame to shift back bearish after it mitigated this supply zone, and we will only get that after price come down here, break through the 15-minute higher low, give us that market shift, and then that is when you can really look for your sell position. All right, so yeah, this is when you can really look for a sell position. And where exactly do you look for a sell position? When this market shift was created, there was actually a 15-minute supply zone that led to this market shift. So you can wait for price to pull back to that 15-minute supply zone, and this is when you look for your entry. Because this market shift right here, it tells us that this 4-hour pullback is over. The 4-hour pullback is finished, and right now price is going to continue going down because it's aligned with our 4-hour bearish order flow and our daily bearish order flow. So this is really when all the time frames are aligned to bearish, and like I said earlier, this is where you get the highest probability trade setups. So if you do enter right here, bear in mind, you can target this wick low that we have right here, right? So there's a little typo right here. You can target this daily wick low because remember, the 4-hour time frame has already shifted bearish after we got the market shift right here, which tells us that this swing pullback is over, and we are expecting price to actually, after creating this lower high, it's going to come down here and break past this low. So this is when, by all means, go ahead, you can target the wick high that we have right here. Alright, so that is basically your multi-time frame concepts. And I understand that right now you might think that, Brad, this looks kind of like complicated. I don't really want to say it as complicated because I don't want you to have the perception that it is complicated. Remember earlier when we talked about the self-transcendence course module, we said that if you perceive trading is easy, if you think that trading is easy, then it will be easy, right? If you think it's difficult, it's going to be difficult. So when it comes to this, I would advise you really go and rewatch these lessons because if you are the first time, if this is the first time you are trading supply and demand and market structure, it can in fact get complicated. But like I said, with enough time, you gain mastery. Mastery comes from repetition. You have to look at charts every single day, show up regardless of how you feel, put in the work, right? And as time passes, you will see this is like nothing. This becomes like level 1 to you. And you will feel like this is actually very simple. And when you can really understand this is when you really develop that X-ray vision when it comes to analyzing the markets. You are able to see exactly where the market is right now and where it's going to go next. So you will develop like this third eye, which kind of allow you to predict where price is going to go because you really understand market structure, which is essentially how price move, and you can also understand supply and demand, which is essentially why price move. So when you can really combine your knowledge for these two things, then you pretty much unlock the secret of the financial markets. You've unlocked then supply and demand, where it's going to go next. So this is when you really develop that X-ray vision when it comes to analyzing the markets. You are able to see exactly where the market is right now and where it's going to go next. So you will develop like this third eye, which kind of allow you to predict where price is going to go because you really understand market structure, which is essentially how price move, and you can also understand supply and demand, which is essentially why price move. So when you can really combine your knowledge for these two things, then you pretty much unlock the secret of the financial markets. You've unlocked the dimension of looking at the financial markets that nobody else can really do it well, right? So yeah, this is really the key to success. So bear in mind, like I said, this might seem difficult or complex at the start, but as time passes, with enough experience, with enough time, when you actually get used to looking at the charts, this thing will get easier, alright? Trust me, it will get easier. Everything is difficult at first, messy in the middle, but at the end, it's goddamn satisfying. It's goddamn beautiful. Alright, so yeah, maybe perhaps we can go through one more example before we move on. Okay, so this is a bullish example, right? I just wanted to show you both the bearish and bullish example so that you guys really understand this and this really get embedded into your subconscious mind, right? So based on this, it's pretty much quite similar to the bearish example, right? But instead, right now the daily time frame is bullish, right? Where we have price breaking past structural, breaking past the last week high, giving us our daily demand zone that we have right here, right? Daily demand zone that led to the break of structural institutional zone. So later on, price goes up there, creating like a internal structure, a little bit internal pullback, internal higher low being formed before price goes up even further. So in this case, there's actually another demand zone that we can draw right here. So based on this, we got two demand zones that we have right here, and then later on, after this break of structure, remember, we are anticipating, we are expecting price to start pulling back. And where is price going to start pulling back? It's going to pull back at some sort of supply zone that we have on the left hand side, unmitigated supply zone. So look towards the left hand side, you see that, okay, there's actually a supply zone right there. Cool. So eventually price comes up to this supply zone right here, and that is when we can start to see price pulling back, creating a fractal market shift first, shift in structural, that tells us that price is going to turn bearish. And remember, fractal market shift, it just tells us that price is going to start pulling back on the internal structure. It has not confirmed to us that the swing pullback has started yet. So based on this, we can expect price to pull back to this last internal higher low, right? And let's see whether this demand does its job. Because if this demand zone were to do its job, buyers gonna come in here and push price up and continue creating the higher highs and higher lows, right? Sometimes this do happen when we just get like this minor internal pullback and then price just go, right? Price does not always have to make these major swing pullbacks, remember, right? But eventually, let's say this 4-hour demand fails, right? It fails to do its job, price break past it like nothing. And then it led to a market shift where price break past the last internal higher low. So this is when we know that right now the swing structure is going to start pulling back, right? The daily time frame, the daily structure is going to start pulling back. That means right now the 4-hour time frame is going to turn bearish to facilitate that daily pullback. So this is where we can start seeing, the 4-hour time frame start creating that lower low, lower high dynamic. And after the market shift, we can expect price to pull back to where? The supply zone, right? The supply zone that created this market shift. So this is the 4-hour supply zone that led to this market shift. So we can expect the 4-hour time frame. It might not look like so nice. It might look something like this, right? Where price goes down there, then starts pulling back, and then comes up here, and then react from this supply zone, and then it starts going back down again, right? So when it go back down, once again, it create another 4-hour supply zone. So it's kind of like a supply chain, right? Where price reacted from this supply, and then come down here, create another supply, and then later on, price goes up there and mitigate this new supply zone again, and just continue going down even further, right? So supply is in control on the 4-hour time frame right now. So yeah, 4-hour time frame, price goes down even further. And remember, after price get below our equilibrium, below our 50% level, that is when we can expect price to step into the discount zone, right? So this is where you got to be cautious if you are still looking for sell position. So the minute price get into this discount zone, I'm expecting price to actually go up anytime right now. But where exactly is it going to go up, right? It's going to go up at some sort of demand zone that we have within this discount zone. So this is when price come into discount zone. And if you look towards the left-hand side, right, what do we have? We have a demand zone on the daily time frame. So this is where I can expect price to pull back, this entire swing structure to pull back all the way down here to this daily demand zone. And this is really the last line of defense, right? But before I move on to here, right, like I said, one step at a time, right here, look at what happened. This is where majority of retail traders get trapped, or rather, majority of you guys lose money. It's because you get trapped by this fake market shift. Now, when you look at this, right, what happened is that price goes down, and then on the internal structure, it creates like a lower high, so internal lower high before price goes up even further. And then eventually price actually break above the last internal lower high. So by right, we got that market shift, and this means the price is going to go up right now, right? Now, you must ask yourself, why did this happen, right? And if you look towards the left-hand side, there was no demand zone whatsoever, right? Price was just making a huge push like this. So in this case, this is not going to be valid because there is no demand zone right here that allowed buyers, huge amount of buyers, to step into the market and push price up to sustain this buying momentum. So most likely, that means that this will not really work out, right? But however, if on this up move itself, right, price actually did this, right, goes up there and then pull back a little bit here, goes up even further. In that case, we get a demand zone right here, and then price does this at a demand zone, then chances are this is going to be higher probability, right? Because sometimes, like I said, price does not always have to go pull back all the way down to the extreme end, right? It does not have to pull back all the way down to the extreme zone before it goes up. It can come to this nearer one, come down here, right? Create that market shift, and then just goes up like this. This can happen as well, right? But like I said, in this scenario right here, there was no demand zone being formed right here. So this is essentially like a trap. It's a trap for traders who doesn't really understand, how to draw their supply and demand zones correctly and understand, where exactly the imbalance is going to step into the market. So in this case, you can see, remember, right now, even though price created the market shift, by rights, we are still bearish, right? The swing pullback has not been over yet because there was not a significant amount of demand that has able to step into the market to push price up. So that's when we can wait, right? Continue waiting until price comes down here to the extreme demand zone that we have right here on the daily time frame, right? The demand zone that led to this market shift, and this is when price starts reversing and head back up, and leading to the official market shift where price break through the last lower high that we have right here, right? So in this case, you will learn later on. This is just like a liquidity sweep where there is liquidity above this little high, and then price sweep the available liquidity and then go down even further, right? Yeah, but that's for later, one step at a time. Remember. So after this market shift, we can expect price to pull back, right? And once again, this market shift, what it does is that it tells us that this swing pullback is over. Right now, price is going to turn bullish, and price is just going to go up, continue going up and breaking past the daily high. So that is when, after this market shift, we can expect price to start pulling back, right? Because after break of structure, price will pull back. So based on this, you can draw your premium discount on this internal high and internal low that we have right here, and we will expect price to pull back to the internal discount zone that we have right here. So that's when price is going to pull back, and where it's going to pull back to? It's going to pull back to a demand zone that could potentially be within this discount zone. So based on this, since this was like a straight push, this is the only demand zone that led to this market shift. But however, once again, if price is actually like doing something like this, in that case, there is one demand zone right here, there's another demand zone right there. Okay, so there's two demand zones that price could potentially pull back to. Now, like I mentioned earlier in the theory lesson, we can never ever know which zone is price going to respect. Price can respect the near zone and go. Price can go all the way down to the extreme zone and go. We will never ever know which scenario it is. The market can do anything it wants. It doesn't care about your strategy. It doesn't care about me. It doesn't care about you. It can do whatever it wants. So as traders, what we can do is to increase our probability by waiting for that market shift to happen, right? By waiting for our entry model to form at the point of interest. So that is when I want to see price pull back, alright? I want to see the internal structure, the internal structure to start pulling back on the 15-minute time frame in this case, right? Our lower time frame is the 15-minute time frame. So I want to see the 15-minute time frame turn bearish to facilitate the internal pullback, right? And I want to see that lower high, lower low being formed. Now, my eyes will be focused on the structure, right? I want to see this internal pullback to shift. That means I want to see that market shift happen. So that's when price pullback, right? Pullback, tap into this 4-hour demand zone. Demand step into the market, overwhelm the sellers, overpower the sellers, and demand take control of price. So this is when, we can look for our entries, right? Where we get a market shift, and then after we get a market shift, we're expecting price to pull back to the 15-minute demand zone that led to this market shift. So price eventually come down here, tap into that, and that is when we get our entry. Right here, this will be the highest probability trade setup because your internal structure, your 15-minute trend, your 4-hour trend, your daily trend, it's all bullish. Everything is aligned like clockwork. Now, at this point of time, like I said, this is the main thing that we are looking for at a point of interest, that we are looking for at a demand zone, right? So earlier on, right here, let's say there's two demand zone, right? One here and one here. So if you're asking me, okay, which demand zone do I want to enter on? And I tell you the answer is you never ever know. Now, using this right here, what we are looking for is basically this happening at either one of these demand zone. So if this happen at this demand zone, then I'll be more than happy to actually enter for the trade. If this happen at this extreme zone, then I'll enter at the extreme zone. So it really depends, right? It really depends on what price want to do. And then later on, price actually goes and breaks up, right, and continue heading high. And this is when we can expect price to break past the wick high that we have right here. Alright, yeah, so yeah, that's basically your bullish scenario. So I hope that inside this entire video, I've showed you how to actually apply supply and demand using multiple time frames and combining with the types of structure.
Mate, the fucking dead hang. Yeah. The dead hang, where you just hang and then you let your body just like get pulled by gravity and like straighten your back and stuff. Holy moly, that shit is fucking good, mate. People are talking about it and shit, but I've been doing gym for like 3 years, 2-3 years. Literally from trading, at the start of trading, I started gymming way more consistently, and dead hangs I only started doing recently, and holy shit, it changes everything. Like the muscles running down your arm, like, are so important to like look bigger because they're like the width of you, and then of course like the connection with your neck and your chest. That's very like key. It's more your shoulders really. Everything in your shoulders gets attached. But yeah, I thought I'd mention that because it's a big thing that's happening in my life right now. And a couple more things I wanted to say is that I'm setting up. I'm talking to my coaches about setting up their accounts today. And mate, I'm taking a bullet, bro. I swear, man. I literally so I'm so overall I'm taking 2% of whatever they're paid, and I'm also taking on the cost of the actual commission that the payment company takes. So I take less than 2%, like more like 1%. And it's silly, mate. It's silly. It's not fair. But that's the beauty of all of this, is that as long as I provide a good service, then there's like there's a reason to stay with me. You know what I mean? Like, if I'm creating this payment service, why don't you just create your own payment service type shit? You know what I mean? That's how I think. And so I've created this so that they can get as much money as possible. I get like the tiniest amount, and also I save them any running costs as well. So yeah, the coach actually has like a massive benefit to just using my service as opposed to creating their own service. And then they also have me as well, who they could be like, I work for this other person, and I'm coaching you. So it like gives more validation for the student to be like, okay, this is actually a system that's actually being worked on. And so yeah, we just need to go through the disclaimer. That's the last thing I need to create, which is basically built around how this server works. It's like I want to create a server where like you join, you get a coach, and then you can like switch coaches if you want. So yeah, we'll see how that works. But we've created the system, or we've created the website, and we now just need to tailor the system. But whilst that is happening, I need to get more people to join, and so to do that, I just need to just branch out, like really just put a lot of energy in. And yeah, I'm very good at it. The thing is, I'm very good at that, but you really have to put in concise effort to want to get to know people. Yeah, and that's a mindset in itself. But yeah, when you're in that mindset, it's really good. So let's continue.
Okay, now is the fun part where we actually apply the supply and demand concepts with multi-time frame market structure on the charts.
We'll do this lesson, we'll do the next lesson, and then we will wind down the revision today.
For this lesson, we're going to use 3 time frames. Once again, our 3 primary time frames. Our higher time frame we'll be using is daily time frame, and then we're going to use 4 hour as our medium time frame and 15-minute for our lower time frame for our trade entries. Alright, so if not, let's just look at this. And if you notice, this is exactly the same example that we had on the combining 3 types of structure lesson in mechanical market structure exercise, right? That lesson is pretty much the same chart that we have. The reason why I want to use the same chart is because I want you guys to actually understand the supply and demand concepts with an example that you have seen before, right? But obviously, you will realize that it will look different to you because right now we have added in this new confluence, this new weapon in our arsenal, right? If not, let's just get started. So over here, after we had a daily break of structure to the downside, right? And price is creating lower highs, lower lows. If you look towards the left-hand side, right, you can see that we had a lot of pivot where price, is like creating the lower highs, lower lows. And then if you look toward right here, there is a pivot where price pull back and then go down even further. So that itself is our supply zone, right? So this is when you can draw once again the entire pivot that we have right here, right? Entire pivot, or okay, let's say just put it up there first, daily supply. So you can either draw the entire pivot, or you can refine it to what the pivot candle right here that led to the entire pivot happening, right? But in this case, you can see this candle, no, it will not be this candle right here. The pivot candle will be this one right here. Yeah, this one right here. Okay, so this one you can see the next candle, it closed below the previous candlestick low, right, which is good, right? So this is our supply zone, and you can see this has already been mitigated because price went down, chop a little bit around here a little bit before price goes up there, retest that supply zone, right, mitigate all the remaining sell orders that we have within the supply zone, and then go down even further. So this supply zone has pretty much been used, so we can just, just get rid of that, keep our charts as clean as possible. Alright, cool. So after price break structure, this is when we can draw another supply zone, right? So based on this is the entire pivot range. Remember, your price going down, head back up, and then go down. Hopefully, I don't need to keep on drawing these orange lines to show you guys that there is a pivot right there. You should be able to spot it with your own naked eyes already. Yeah, but basically there was a supply right there. There was a pivot zone where price pushed down, right? And then demand stepped back into the market a little bit, caused price to pull back, and then supply take back control and push price down even further. So if you were to refine this, refine it to a pivot candle, it will be this candlestick right there. Okay, so this is our supply zone, and right now price is just break structural. That means we can expect price to pull back to our supply zone that we have right here, and potentially this is where we can look for our entry, right? But there's another supply zone that we have right here. If you look at this, if you think about fractal refinements, price went down. This candlestick itself, what it did was that we go down, pull back, and then go down even further. So you can see there was actually another supply zone that we have right here, right at this little candle that we have right here in the middle of these two large bearish candlestick. So now we got two supply zones, right? And right now, after this break of structure, we are anticipating, we are expecting price to start pulling back. But then, where is price going to start pulling back? Or rather, when? When is it going to start pulling back? When it meets a demand zone, right? When it meets a demand zone, so on the left hand side, so we look towards the left hand side to find some sort of unmitigated demand zone, right? So I look towards the left hand side, okay, cool. Right here, okay, you can see right here, there's a lot of demand. You can see all of this demand right here, right? All of this demand zone that we have earlier on right here, it has already been mitigated, has already been bypassed, right? So in this case, I will just get rid of that. Now, over here, what we have was another demand zone, right, where price goes up, push down, and then go even further. So this entire area can constitute as a demand zone as well, right? So this is our demand zone, and right now price has officially tapped into this demand zone. So this is when I can expect price to start pulling back, right? Because I can expect some sort of demand come into the market and push price up. Why? Because this demand zone has not been mitigated. I mean, yes, it kind of got mitigated right here. You can see price goes up, push down, goes up, mitigate this demand zone before going up even further. So there was in fact some orders that was filled, right? But there could potentially be some remaining orders that has yet to be filled within this demand zone. So it is still valid even though it has been mitigated. So right now we can expect some sort of demand, some sort of buyers to step into the market and push price up. And then if you look towards the left hand side, there's actually another demand zone, right? So this is the first demand zone, and then if you look right here, we have another pivot where price push up.
Bro, it's as if he was like, yeah, this is the demand zone, and then he pressed play, and then it just collapsed. And then you'll see it just skips, and then he's like, and you see here, there's another demand zone. Look, and then he's probably, I think I've gone over this lesson before. He's look, it just collapsed. Look at the reacted from this demand zone. Let's go back up to here. All right, let's continue.
Market and push price up. And then if you look towards the left hand side, there's actually another demand zone, right? So this is the first demand zone, and then if you look right here, we have another pivot where price push up, pull back, and then go even further. So this itself is the entire demand range as well, right? So we can draw that up. So you can see pretty much price has stepped into the demand territory, right? Where we know for a fact that there's going to be some sort of demand inside this order that is going to cause price to push up, right? So that is when we continue play price forward. You can see, okay, over there we got a fractal lower high being created right there, right? So this is the last fractal lower high, so we just mark that up right there. So this is dotted line, right? So this is the last fractal lower high. So if price break past this last fractal lower high, then we could potentially get a fractal market shift, right? Okay, you can see demand stepping into the market right now, right? You can really observe the candlesticks, and it really tells you everything. In this case, you can see the selling pressure, it starts to become slower, and price action start to get a little bit choppy. There's not much supply left in the market. So this is when we can really see that, okay, the bulls, the demand have officially stepped into the market, and they could potentially overpower the sellers and cause price to move up. In order for that to happen, I need to see price take up this last fractal lower high, right? So give us our fractal market shift. So eventually price goes down even further. Okay, you can see in this case, price pull back all the way up here, did not take out the last fractal lower high, and then go down even further. So based on this, I can move my fractal lower high to here now, this one right here. Okay, cool, price goes down even further, and then eventually, okay, demand finally stepped into the market. So this zone has been pretty much demolished, so let's get that aside, and then now you can see we have stepped into this next demand zone, and then this next demand zone that seems to have quite a lot of demand, right, which is indicated by this little bullish candlestick right here. So this is when I want to see price take up this lowest lower high. So if you jump down to the lower time frame, 4-hour time frame, this is when you see the internal structure, right? You can see this will potentially be the fractal lower high, but then the internal structure, the internal lower high will be this one right here. Yeah, so this is the fractal lower high, and then this will be the internal lower high. So why is this the internal lower high? Because this is the highest point that led to price breaking past the wick low that we have right here, right? That led to this break of structure right here. So map that up as another break of structure right there. Okay, yeah. So that's our fractal low high, and you can see there's demand stepping to the market, right? Very obvious demand, right? Okay, you can see it meets this data supply zone that we have right here, and you're really able to see whether price actually. Okay, my bad. That is actually a 4 hours. Okay, draw that up. 4 hour supply, please. Okay, you can see there's supply stepping to the market, but in this case, if this supply zone fail, right, this tells us what? This tells us that price could potentially lead to get the market shift, that bullish market shift already, because the demand have really take back control of the market. And then bam, eventually we get a close, right? We not only get a fractal market shift right here, we also got a market shift where price break past that internal lower high that we have right here. Now once price break past this internal lower high, market shift, now we know that demand is in control, and this supply zone, all of this supply zone that we had earlier right here, it has all been filled, right? So okay, all of that, now demand is in control of price. And this white zone, I'm just gonna like get rid of it already. So right here, right now price is officially tapped into our supply. Now, what can we use this for? We can use this to actually signal to us that right now, sellers gonna come into the market and price gonna start pulling back. Because after this market shift happen, we must expect a pullback to happen to some sort of demand zone that we have right here before price goes up even further, could potentially come up to mitigate this extreme zone. So that is one scenario that can happen. Another scenario is that price can just react from this recent supply zone, enough supply step to the market, overpower the demand, and just cause price to go down even further, creating that lower high and lower low. But like I said, we never ever want to assume which scenario it is. We just want to observe what the market does. So based on this is where I can draw a demand zone, right? This would be the demand zone that led to the break, the market shift right here, right? So this is where I can draw my demand zone right there. And then I can see there's another more recent demand zone that we have right here on this little pivot, this little demand range right here. Alright, so right now, this is where supply steps to the market, and we can expect price to pull back to either this zone or this zone. Right, so you'll see, okay, before we do that, we can actually mark up our fractal low, right, okay, based on this right here, my fractal low will potentially be like somewhere right around, yeah, somewhere right around here, this is my fractal low. So this is where you can potentially jump down to a 15-minute time frame, right, let me just jump down to the 15-minute time frame and show you guys, right, so based on this, oops, so we can actually map this up as our high, right, our 15-minute high, right there, this will be our 15-minute strong high. Okay, but we can only map that out as our strong high after price break structure, and it has not broken structure yet, right here. This one was kind of like a fractal structural break, right, but this is the last internal, yeah, the last internal higher low. Actually, it will be this one right here, this will be the last internal higher low right here, right. We need to see this get taken out in order for us to confirm that price is going to pull back to this zone. If not, price could potentially pull back to this zone that we have right here, and then just goes up, right, in this case, like what I have done right here. So we'll see whether it does that. I just place price a little bit forward. Okay, chop along here, you can see. In this case, right, price came back down here, mitigate this demand, and then went. So in this case, I'll just remove that, and price could potentially go up right now, right? Because I observe in my experience what tends to happen after a market shift just like this, right? After such a huge down move, after a market shift, the pullback is usually quite short term, right? Price can just pull back a little bit and it just goes, right? It doesn't have to make a very deep pullback and then go, right? Because yeah, that's just the nature of the market. So this is when we can potentially get price reacting from this demand zone, and it seems to be just going already, right? So we just continue to see what price does, and you can see eventually it makes like a deeper pullback. All right, we get a deeper pullback. Nice, we got a deeper pullback, and then you can see price seems to be just going. Right, it just seems to be going higher and higher. So in this case, you can see it just broke the last internal high. So we can just mark that up as our internal break of structure. So you can see in this case, right, this was a pullback itself, where price mitigated this demand zone that we have right here, and then it just went up. So in that case, this one, it looks like price is not coming down here already, so we can just remove that. And then since we already got the internal break of structure, and price has already mitigated this demand zone, right, we can also remove that. And this is when I will put this as my new 15-minute, rather, wait, this is 1 hour time frame, I just realized. Okay, let's go back up to the 4 hour time frame. Okay, this will be my last 4 hour low, right? This is my 4 hour strong low that led to price breaking structure, right? That's my last 4 hour strong low. And you can see right now price is potentially completely disregarding this supply zone, right? So we'll see what it does, right? That's it. Okay, you can see price starts pulling back, because after this internal break of structure, you're expecting price to start pulling back, right? So let's go back there a little bit. Okay, so over here, where is the demand zone, right? There will be a demand zone that is formed right here, right, within this wick itself. If you go down to the lower time frame, you'll see what caused this internal break of structure. It will be this entire, this long, you can see right here, this very steep pivot right here. This will be the entire demand zone, right? For this case, you can either mark it like here, or yeah, you can mark it right here. This will be a more refined zone. So we can expect price to pull back to this more refined zone. Once again, price can just pull back to the range, and then there's actually another demand zone right here at this pivot itself, right? You can see this is where price goes up, pull back, and then go even further. So right now, after this internal break of structure, we are expecting price to start pulling back, right? And where is it going to pull back? It's going to pull back to like either one of these demand zone that we have right here. So play price forward a little bit. Okay, right here, before we move on, let's try to get that fractal market shift. Okay, maybe on the 4 hour time frame, do we get a fractal market shift? Okay, 4 hour time frame, the fractal low is quite below here. What about 15 minute? Okay, 15 minute, yeah, this is really the last internal higher low that led to price breaking structure, right? So this is also the last fractal low. Fractal low will be probably like right here. Yeah, right here, somewhere around here. It's the nearest low that led to the break of structure, right? So this will be the fractal low on the 4 hour time frame. You can see it right there. Yeah, you can see. Yeah, or you can just do this one honestly. Yeah, doesn't really matter. Put that there, fractal low. Okay, you can see price comes down there, create that fractal market shift, and then price comes down here. Right, once the fractal market shift happen, all it does is that it tells us that the internal structure is going to start pulling back. Alright, so that is when we get the internal structure, it pull back to either one of these demand zone, right? So you can see once price enter into either one of these demand zone, that is when I personally will go down to the 15-minute time frame to look for my entry. Because remember, right now, we are playing against the swing trend, right? If you look at the higher time frame trend, it is still bearish. Until we take out this last swing high that we have right here, we are still bearish. So price can continue, showing a lot of bullish momentum, come all the way up here. Until price break past this, we are still bearish. That means price could potentially come here and then go down even further. So our expectation is that price will continue that lower high, lower low dynamic on the higher time frame. But right now, price has turned bullish, right? To facilitate that swing pullback, to facilitate the daily time frame pullback. And then that is when we got this market shift which confirmed to us that yes, there is in fact a swing pullback happening. So right now, this is when price enter into either one of my demand zone, this one or this one right here. And then once price enter into one, I want to go down to my lower time frame to look for my shift in structure. I want to see this internal structure finish, right? Give me some sort of market shift and tell me that right now price is going to turn back bullish, and that is when you can potentially look for your entry at this demand zone that created this market shift. Okay, so that is when I'll go down to the 15-minute time frame. Let's really map this up. Okay, so based on this, you can see there's a lot of chop going on right here, right? A lot of choppiness going on right here. Price end up going even lower to potentially get price. Okay, right here, based on right here, you can see there's potentially some demand stepping to the market, right? So based on this was the last internal break of structure, right? And then we got market shift happen right here. Right, so you can see price actually ended up pulling back to basically this entire demand range that we have over here, right? You pull back into this demand range, tap into it, and it started going. So this is when we know that right now, this internal pullback is going to end, and right now price is going to continue to go up. It's going to turn back bullish. Demand is going to come back into the market and overpower the supply. So this is where after we get a market shift, we can expect price to start pulling back to a demand zone that created this market shift. So based on this would be pretty much the entire demand zone right there that lead to this market shift. Right, it's considered as an institutional zone because this demand zone, right, it caused this market shift, it caused break of structure. So yeah, you can either map this up as just this candle or this entire range that we have right here. Okay, so you can see price, price move into it. Okay, let's see, does it get to the refined zone? Okay, not really, never really get to the refined zone. It got to like this entire range over here. So what you have possibly done, right, in this case is that you could potentially place like a buy limit order right here, right? Place like a buy order right there, and then place your stop loss below the zone, right? Because you always want to place your stop loss below the zone. So in this case, place your stop loss below the zone. And yeah, for your take profit, you can place it at the opposite supply zone, right? For me personally, if I'm entering at a demand zone for a buy position, I'm going to place my take profit at the opposite supply zone. Or you can target the week high, right? So this could potentially be the week high that we are expecting price to break, right? So this will be the week high on the 4-hour time frame. So just put that up to 4-hour week high. Okay, you probably can't see that right now. Let's just put that to 15-minute week high then. Right, this is our week swing high right here. So we can expect price to actually take out this high that we have right here. Right, and this is actually considered as a strong swing high. Let me just change that up to strong swing high. It's a 15-minute strong swing high, but it's a 4-hour week swing low. I mean, what am I saying? It's a 4-hour, it's a 15-minute strong swing high, but it's actually a 4-hour week high. Because right now, on the higher time frame, we are expecting price to continue to go up even further, higher highs and higher lows, until it gets to this supply zone that we have right here, right? Or until we get into the premium pricing. So if you go back up to the higher time frame, right, you can see, are we even inside the premium pricing yet? Dragging from the swing low to the swing high right here. You can see right now we are actually in the premium pricing, right? But right now, that's the next demand zone, and that's the next supply zone that we are aiming for. So in this case, right, our expectation is that price is going to continue bullish. Since it has disregarded this zone right here, we are expecting price is going to continue bullish to go up even further to this extreme supply zone. Alright, so that is when we could see price potentially breaking past this week high that we have right here. So it's a 4-hour week high, but it's a 15-minute strong high. Why is it a 15-minute strong high? Because, okay, let's just clean this up a little bit. Because over here, it led to this market shift, right? If you look at the internal structure, higher highs, higher lows, higher highs, higher lows, higher high, and then price comes down and break past this last higher low. So it led to this market shift that we have right here. So since it led to this market shift, this will be considered a strong swing high. So this is where we got the market shift right there. Okay, and right now prices came all the way down here, right? And our entry is at this edge of the zone. We're just gonna keep it mechanical for now. Later on, you will learn about how to enter at the equilibrium or even the extreme end, completely up to you. But we'll just keep it simple and just place it at the edge of the zone, right? And right now, for this, I'll place it at some sort of supply zone, right? Either some sort of supply zone that we have on the left hand side, or this strong swing high that we have right here, or the 4-hour wick low, right? So based on this, let's just manage our expectation and place it at some sort of. If I look towards the left hand side right here, what do we have? All of these are supply zone, right? Because when price is pulling back on the internal structure, price is giving us lower highs, which are itself supply zone. So based on this, okay, mark this up as my 15-minute supply. Okay, 15-minute supply right there. If you refine this, you'll be like somewhere around here. And then, okay, and then there's actually another supply right here as well. You can see this is like a freaking consolidation right here, where it's just going sideways and then go down even further. So you can mark this entire consolidation up as your supply range. So in this case, right, you could either target this wick high that we have right here on the 4-hour time frame, or we can target either one of these supply zones. So for me, like I said, if I'm entering for a buy at a demand zone, I'm going to be targeting my next supply zone. If I'm entering for a sell at a supply zone, I'm going to target the next demand zone. And sometimes I'll target the swing high or the swing low as well, depending on the context of the market. But in this case, let's just keep it simple. Let's just target this zone, right? Like a quick 1-2 trade. So you can see price step into it, okay, demand step into the market, right? And then we can see price consolidating a little bit before price goes up even further and come all the way up there, right, to our extreme supply zone. So you can either target this one and target this one and still win both trade, right? In this case, you target this one, you got out of the trade, very simple trade. Because what happened was that price came back down to fill up all the demand that we have right here, right before price explode. You can see this is a very big sign that institution and smart money have entered into the market and pushed price up. So seeing this, right, and potentially we got like an internal breakout structure right here, right now, where can we expect price to actually start pulling back after this internal breakout structure? Either one of these supply zone that we have right here. So you can see price went all the way up there, and it actually came all the way up here to the extreme end, mitigate it, and then starts pulling back, right? So after it starts pulling back, now remember your 15-minute trend, your internal structure, your swing structure. I mean, your swing structure is still bearish, but your internal structure right here on the 15-minute trend is bullish right now. And then if you go to the 4-hour trend, the 4-hour trend is also bullish. So this is when we know that price is potentially gonna head up even higher, right? So play price forward right now. Okay, it actually came back down here to re-tap into the demand zone that we have right here, right before going even further, showing you guys how accurate this demand zones is, right? So in that case, now we can expect this wick high to get taken out then. Yeah, I can see it finally got taken out right there, and that is when we get another break of structure to the upside, and yeah, just put it there, right? Okay, and then after this break of structure, we can expect price to start pulling back again, right? But where is it most likely gonna pull back? It's gonna pull back at this supply zone. But in this case, why did it start pulling back? Because if you look towards the left hand side, there could potentially be some sort of supply that we have right here on the 15-minute time frame, right? If you see here, right here, yeah, on the 15-minute time frame, what happened? There was in fact a supply zone that we have right here, right here on the lower time frame. So if you drag this out, price potentially met that and then starts pulling back. Yeah, just look at this. Price came into that and then starts pulling back right here, and that is when we can expect price to pull back to the demand zones that we found within this area right here, right? So just remove all of that. So going back up to the higher time frame, where can I expect price to pull back to? Right? This demand zone. That's actually a demand zone right here at the extreme end. This will be our 4-hour demand. This demand zone. Now the thing is, this demand zone has been mitigated, right? This was a demand zone that was formed, and then it came down here, mitigated, and then got even further. Now there is another demand zone that was formed when price actually did this pivot, right? And it'll be this one right here. But if you notice, it's quite similar. It'll be this entire long candlestick right here. So this one itself was a demand that price tapped into before price goes out even further. So that's when we can expect price to pull back to that. Right, once again, this is the refined zone. It doesn't have to pull back to the refined zone. It can pull back to like this entire demand range, right? This entire pivot right here. You can see it pull back into this entire pivot. Okay, you can see price goes down further. Does it actually get to the refined zone right there? Yep, it came into this defined zone, and this is when we can expect demand to step into the market and push price up. Now, bear in mind, this is no longer the strong low. The strong low will be right here since it broke structure. So right now, this is the strong low, and then this is the wick high. Right, this is our 4-hour wick high right there. And if you go down to the 15-minute time frame, right here, since price has entered into a demand zone, we want to see what price does. And based on the lower time frame, we can see price came into this beautiful demand zone that we have right here. Right, we can expect the movement, we can expect the demand to step into the market anytime right now. If you you want, you could even drag like the premium discount from the swing low to the swing high that we have right there. And you can see price is within that discount pricing right now. So we can really expect that discount to step into the market. I mean that premium to step into the market. I mean that demand to step into the market anytime soon. So this is when, okay, price chop a little bit here, a little bit. Okay, price comes down here. Right, this way I will continuously observe the market, right? It's creating this little internal breakout structure that we have right here. Okay, and then this is the last lower high. Okay, I want to see the last lower high get taken out. Remember, give me that market shift that tell me that this internal structure, this pullback is over, and right now price is gonna turn back bullish and hit back up. That's what I want to see. If not, then I will just not do anything because right now price is really in the middle of nowhere. We're just going around here, chop around, go down even further. Okay, chop around. Okay, you can see demand starting to step into the market a little bit. You can see the supplies start to go away, and based on this, where will be the last lower high? Get a little bit internal breakout structure right here. So this will be the last lower high. Does this break structure? No, not really. So this itself could potentially be your market shift. This is the last lower high on a 15-minute time frame before price actually breaks above it, right? Giving us a market shift. So in this case, go back time a little bit, right? Let's go back time a little bit. Okay, price has entered into the extreme end of our demand zone, right? And then over here, we got that market shift finally, where price break above the last lower high. Now this was not really nice because this candlestick, ideally I want this candlestick to close above the previous candlestick high, right? So but in this case, it never really closed above, but on the lower time frame, it definitely closed above and before it went down. So this was pretty decent break, right? So based on this, I can draw my demand zone right here. Okay, 15-minute demand zone. Right there, we can expect price to pull back into this demand zone before tap into this demand and before it starts going up again. Okay, and then overall later on we get that internal breakout structure. Nice, which pretty much confirmed to us that the 15-minute trend has turned bullish to be aligned with the 4-hour trend, right? So this is when we get that bullish internal breakout structure. Now, this one has been mitigated. Cool. Now, what led to this internal breakout structure? This demand zone that we have right here, right? This demand range right here. So now we can expect, after this internal breakout structure, we can expect price to pull back into this demand range, right? Mitigate it before going up even further. So price play price for a little bit. Okay, let's say we do this at, okay, let's just let this a little bit long. Now there's actually another supply, I mean another demand range right here, right? So another demand range right here. So you see, okay. Okay, you can see price eventually come down to our extreme demand range that we have right there. It's just choppy right now, just consolidating. Yeah, I can see eventually come down into this area that we have right here. Now this is where you can potentially look for a buy position right here, right, to buy all the way back up. Because this one right here, this extreme demand zone, it has already been mitigated, right? But once again, it's still valid, so price could possibly come down here before it goes up. Right, let's just see what price does. Okay, it comes down here. Right, you can see, it came down here, and it still went up, and demand really stepped into the market this time. Right, this is very obvious, smart money, came in here, fill up their buy orders before going back up. So you can see in this case, right, this is a very good example actually. Even though this demand zone has been mitigated once, but there was more orders, probably within this 50% of this level right here. I can see there's more orders within this equilibrium level, right? So this is when price mitigate it and it fill up a little bit of orders, but next time price actually come down here and fill up the remaining orders. So like I said earlier, right, or what I've been saying for the past few lessons, even though price has already mitigated, doesn't mean that it's invalid. It's still valid. It's just it's less effective compared to a zone which is fresh and unmitigated. So in this case, price coming here, mitigates it, we got that demand step into the market. So you can easily enter for a buy here, or yeah, you can easily enter for a buy right here. You could easily enter for a buy, place a buy order at this like extreme zone, and once again you can target this week high on the 15-minute time frame, or you can target, you know, potentially all the way up there, right, all the way up there, right, all the way up there, and at this 4-hour wick high. Completely up to you, right? It depends on what type of trader you are. But let's say you just want to target this high right here, right, this high right there, right? So just target this 15-minute high because we're expecting price to take that up. Okay, before price goes down even further, right? This kind of stuff happen, right? It is what it is. So we see what happens, all right, before it goes up even further. Now later on, as you go through the lessons, you will learn that this is actually a liquidity sweep, right? This right here is a liquidity sweep where price comes down, sweep the available liquidity that we have below these lows before it goes up. Later on, you will learn how to prevent losses like
The available liquidity. Oh my goodness. It's available liquidity everywhere.
and yeah, later on you will learn all this good stuff. Yeah, but this is a very clear liquidity sweep. Price comes down there, sweep available liquidity before going up there. So in that case, you potentially got stopped out. But guess what? You learn a very valuable lesson about liquidity, right? Which you learn later on, right? And now demand is, like I said, demand is in control. So since price break structure again right here, that is when I can actually draw my new demand zone right here at this extreme end, right there. Yeah, price is just chopping around at the moment. Honestly, let's just be a little bit faster, yeah. Okay, right here, chopping around a little bit. before price goes up even further, come down here, pull back to this. Okay, this is a little bit too fast. Right, so what happened right here on the 15-minute time frame? Let's take a look. Over here, price did not mitigate this, right? And then over there was a demand zone that was being created right here because price broke structure right here, right? You can see right here, this is when price created that internal break of structure to the upside, and that gives us our demand zone that we have right here. If you can refine it to this zone right here, see price came down here, tap into the demand zone, and then got even further, right? And then creating another internal break of structure right there, and this gives us another demand zone that we can actually draw right there. And you can see price comes down. Okay, this is too damn slow. Okay, I can see pretty much price just went up and it never come down to mitigate the remaining zones, and it just like absolutely skyrocketed, right? Skyrocket all the way up here to this extreme supply zone that we have right here. Now, when you look at this, right, remember this is really the last line of defense. Right now, price has just break past the 4-hour week high, giving us another break of structure, right? Another break of structure that we have right here. Right now, this is where we want to see price respect, right? So let me just actually kind of get rid of all of this noise that we have right here. Just get rid of all this noise. Now, in order for price or the higher time frame, the daily structure to remain bearish, price must create a lower high right here and then go down even further. If it decides to go up there and break past this high, right, I must get a candlestick close above. Then that means that we get a market shift, and right now price has reversed to the upside, and this means that the bearish structure has shifted to bullish, and right now the demand is in control of price. All right, so in this case, now what am I looking for at this extreme supply zone? I want to see price do this, right? On the 15-minute time frame or something, price creates a higher low right here, internal higher low. I want to see the internal higher low get taken out to signal to me that this swing pullback is over. And then I want to see price goes up back up there, retest this supply zone that created this market shift, and this is when I can potentially look for my entry. This would be for the bearish scenario. But let's say if price decide to go the other way and just breaks past this entire last lower high, then I would be looking for buy position. I'll be trying to trade with the bullish market structure right now. So let's see what price does. Right, so price have entered into the zone right here. You can see there's a lot of momentum, so I will be careful. Right, you can see a lot of momentum right here. Doesn't seem to be slowing down whatsoever. Okay, price goes up even further. Okay, it starts pulling back, right? So supply have entered into the market. Right, let's see whether this actually holds. Okay, this is where I look at the 15-minute time frame. Right, so 15-minute time frame, go back there. Yeah, I can see it can get a little bit messy where there's a lot of zones going on. That is why I always want you guys to just focus on the current range. Right, if you just focus on the current price range and not thinking about how to draw zones from here from ages ago, it'll be so much more easier for you. Right, so based on this, let's just map out everything. So right now, remember, we are in a 4-hour supply zone, alright? I mean, no, we are in a daily supply zone. This is a strong supply zone, alright? We know there's going to be supply inside the market right here. And then based on this, where is the last internal lower high? This is the last internal break of structure right there. So this will be the last internal lower high, and this will be, we'll just map that up as our 15-minute strong high, right? Strong internal high. Or you can mark this as 15-minute strong swing high. Okay, and then this is our 15-minute strong, 15-minute weak low, right? Weak low, fixing low. And then we'll map everything in between as the 15-minute swing internal structure, right? So this will be, let's say, 15-minute internal break of structure, 15-minute internal break of structure right here. So it kept on going down, internal break of structure right there. Zoom in here a little bit. Okay, we get the internal break of structure to the downside, internal break of structure, continue, internal break of structure until here. And over here, we actually got like a market shift where price actually shifted to the upside, right? So once again, you look towards your left. Where's all the demand zone, right? So there's actually a demand zone right here, right? On this pivot alone, right here. Demand zone on the 15-minute time frame. Drag that all the way up there. And then there's another demand zone right here on this pivot right here. Now, you can see in this case, price came into this demand zone, right? Some demand stepped to the market and caused the entire 15-minute to get a fractal market shift right here. So this is where we got a fractal market shift. Right, you can see, yeah, fractal market shift happened right here. And then eventually it led to a market shift where price break past the last internal lower high right here. We got a fractal market, we got a market shift right there. Okay, so yeah, I can see price got the market shift, which pretty much tells us that right now price has turned bullish, right? This pullback was surprisingly short, and right now price has officially turned bullish, and you can see a lot of demand step into the market right here. And that is when I will actually draw my demand zone, right? Since this one has been mitigated already, I'm just gonna get rid of that. And now that is when I'm really interested in the demand zone that created this market shift. So it will be this one right here. Remember, after this market shift, we are expecting price to start pulling back to a demand zone, right? So that's when you see price comes down here, right? Tap into this demand zone. Okay, cool, right? But remember, right here, our expectation was that on the higher time frame, if price were to continue bearish, right, price have to start reversing and go all the way back down. That means, okay, just a quick recap again, right? One step at a time, right? Right here, what happened? On the 4 hour time frame, we said that what price is doing is that it's turning bullish to facilitate that swing pullback on the daily time frame. So what we do want to see is this: price goes down, come down here, creating the bearish break of structure, and we are expecting price to start pulling back. So price turn bullish right here to facilitate that pullback, right? Getting higher highs, higher lows, and higher lows, and eventually comes down here, right? Potentially creating some sort of internal higher low right here before price, before price just stagnant right there. Now we need to see that fractal market shift that lead to that market shift on the internal structure, right? That means we need to see this is the last internal higher low. We need to see that get taken out to tell us that the supply is still in control of the market, the bearish market structure is still going on, and right now we're going to go to the downside. If we do not get that whatsoever, then we could expect price to actually, potentially come down here. If it respects this higher low, goes up and break past the last lower high, and this will tell us that the market structure has turned from bearish to bullish. Remember, we want to adapt to the market, we want to react to the market, we don't want to assume. So all we can do as trader is, let's say, go down to the 15-minute time frame, look for our last internal higher low, that pivotal structure that will decide whether price is going to be bearish or bullish. And then we will look to see whether price break it or not. So remember, on a 15-minute time frame, we have marked it up, right? This will be the last internal higher low. This is the last internal higher low that we have right here. Okay, so if price breaks this, then all hell break loose, and we can expect the bearish market structure to be in control of price. And right now, price will just continue to go down, right? So based on this, we'll see what price does. Okay, so if I were actually to map up the internal structure, this will be the last internal, strong internal right there. Now, why is this strong? Because this internal low led to price breaking past the last internal high. So that is when there's a strong internal high, and then this will be a weak internal low, right? So mark that as a weak internal high. I mean, strong internal low, weak internal high. So I can see right here, price came back here to this demand zone. Do we get a reaction or not? Okay, cool. We get price come down into a deeper area right here, the 50% level, before price starts consolidating here a little bit, before it hits up, right? And it breaks past this weak internal high. Now, this is our internal break of structure, right? Where we got a market shift, and then it led to an internal break of structure where price moved to the upside. You must ask yourself, do I really still want to look for a sell position right now? Right? Does it really still make sense to look for sell position? Because if price were to continue bearish, price had to break past this last internal higher low that we have right here. In that case, it did not do that whatsoever, right? It did not break past this internal higher low whatsoever. But also, we are still below the wick swing high, right? So we are still pretty much playing within this range. That means price can do whatever it wants right here. It can do whatever it wants right here. As long as it does not break past this wick swing high or this strong swing low that we have on the 15-minute time frame, this is the last internal higher low. As long as we don't get a break, price can potentially do whatever it wants here. It can consolidate, do whatever it wants. If price break through this, then it shows us that price has completely disregarded this supply zone, and the bearish market structure is gone. The bulls has officially taken control of the market. The demand is in control of the market right now. Okay, so that's when you see right here, we potentially got the market shift, which tells us that this internal pullback is done. Right, price is not going down any further to break past this strong higher low. Right, but that can only be confirmed after price break past this high, right? And it did right here. Now, this is when all the hopes of us hoping that price is going to turn bearish is gone. So this is when price is officially turned bullish right here. Okay, so this is potentially a bullish break of structural. I just put it up there. Go back up to the higher time frame, you see right here. Price has literally came on to this extreme end. Now there is still hope because price has not like broke past this last high right here. There is still hope, but you can see it's very near. If you look at this, there's so much demand in the market going on right now. It seems very less likely that price is going to go down already, right? It seems like the buyers are coming here to take control of the market, right? So based on this, let's see, do we get a close above this high? You can see eventually we get a close above this high, giving us a market shift where price is officially shifted from bearish to bullish. Now the buyers are in control of the market. Now demand is in control of the market, right? Because remember, if price wanted to remain bearish, price has to pull back all the way up here to this supply zone, break past the last internal higher low, right? And then come back up to some sort of supply that we have right here, react from it, and then go down. Then that is when price will continue that lower high, lower low dynamic. But in this case, that did not happen, right? This is when price goes up there, break past the last internal lower high. Let me just show you what it looks like. Break past this last internal lower high, give us what? Our market shift. Now, after this market shift, what can we expect? We can expect price to start pulling back to a demand zone that we have within this area right here. So based on this, right, let's just clear things up a little bit. Very confusing right here, right? So this is when I want to see price pull back to this demand range that we have right here, right? If we were to refine this zone, it could potentially be this one right here. There's a demand right there. The 4 hour time frame, 4 hour demand. demand right here, right? So we can expect price to actually pull back to either of this demand since it has just created this market shift.
His supply and demand rules are loose, and that's I think the confusing part is that he's like, yeah, it could be here, could be here, could be here. And then you're like, well, fucking looks like I have to fucking learn this myself a little bit, which is cool in some ways. I like how he gives like this sort of blueprint that you can work off of. But yeah, some little things that I need to change, which are like quite difficult to pinpoint, like my supply and demand rules, whether it aligns with support and resistance, and how I want to perceive the market, because support and resistance is really how I fell in love with trading. I say this over and over again. So everything is sort of got to be integrated with that, and yeah, I need to backtest that again as my strategy. It's not that I'm changing strategies; it's that I haven't found my spark, and the spark originated from support and resistance. But then there's like some extra rules which are needed to make sure that we're actually hitting the fucking, hitting the home runs as opposed to over leveraging and being proven wrong, which is why I'm here right now and not on support and resistance per se.
To speed things up a little bit, I'm just gonna stick to the 4 time frame for now. Right, see whether price pull back to here or not. Right, there's actually another demand right here. Almost forgot right there. Okay, seems like price just did this small reaction and then go up. Remember, just now earlier I said, right, after a market shift, what happens is that more often than not, you will see price just do like a minor pullback just like this and then go up. It won't make like a deep pullback just like this because there's a lot of momentum since demand has just stepped into the market and overpowered the supply, right? So we tend to see a lot of momentum. So right now, since price is in a bullish market structure, we can expect the demand to be in control. That means we can expect this demand zone to hold and this supply zone to fill. Now,
the amount of times he
price
says expect.
have just created this market shift and then it created another break of structure right here.
It's like fucking
Right, another break of structure to the upside right here. Now,
an
after break of
insult
structure,
to Mark
anticipate price
Douglas.
now, where it's gonna start pulling back towards the left. Unmitigated supply zone. So this is where you got a supply zone right here. Right here, unmitigated, so fresh whatsoever, very, very fresh zone. And this is where we can expect price to meet some sort of resistance, right? Some sort of supply to step into the market to push price down, to allow it to facilitate the pullback to the next demand zone that we have right here before going up even further. So you'll see how that play out and just move this demand zone up there. Since this has already been mitigated, this will be the new demand zone right there. Very fine, you can see right here. Okay, so you see, okay, as you can see right here, as soon as price step into this unmitigated supply zone, it fill up the remaining orders right here that has yet to be filled up, and then supply step into the market and cause price to come down to where? This demand zone that we have right here. And then price come down here, respect this demand zone, and then go up. Right, you see. And then before continue going up right there, you can see demand. Yeah, this is really the cycle of supply and demand. Like I said, this is really the blueprint of price, guys. And you can see right here, a lot of the supply right now going on. Okay, before I find that break structure right there. And then now, since break structure right here, and you also break structure right here. Okay, there's a lot of zones right here. Now, after you break this structure, this is the demand zone, and you can see price comes down here, mitigate this demand, and then go. Now, after break structure again, this is the new demand zone that we have right here. So where is it gonna start pulling back again? Look towards the left, and you see there's an extreme supply zone right here. This one is gonna be pretty strong because this is the one that led to price starting this entire supply chain in the first place, right? Led to price actually creating this supply downtrend bearish market structure for like 1 month straight. Yeah, for 1 month straight. So this is really the pivotal moment. So this you gotta expect there gotta be some sort of selling pressure right here. There will be supply at this area that's gonna cause price to actually start pulling back a little bit. Right, you can see right here, supply step to the market, cause price to pull back to where? This demand zone that we have right here. Right, come here. Okay, then to this. Okay, potentially we got a break. Now, this could tell us that this uptrend could be over, and right now it could be reversing to a downtrend right now. Because based on this, price has just created a market shift where it just break past the last high that we have right here. Right, so that's a market shift right there. And now we know that, okay, potentially, right now price is going to reverse to become a downtrend, right? And that means supply is in control of price right now. So based on this alone, okay, after this market shift, you can draw up the supply zone that led to this market shift. So I will mark this up right here. There's a supply zone right here. And then there's actually another supply zone right there. And once again, remember, after the market shift, what happens? Price tend to pull back just a little bit. It doesn't make a deep pullback like this. It tends to pull back just a little bit before price goes down even further, because at the start of each move, at the start of the market shift just like this, there is a lot of momentum, there is a lot of pressure, right? Smart money is applying a lot of pressure to the market, and it's causing price to move very, very fast. So in this case, price does not really mitigate this supply zone that we have right here, just continue going down even further. So based on this, price goes down even further, it's creating the lower high, lower low. Now we can expect your demand to be in control of price, right? Demand is in control of price right there, and you can expect price to mitigate this demand zone, go down even further, and then forms a new demand zone, right? New supply zone right here, and we can expect price to actually mitigate this supply zone again. Okay, this is where whenever price step into this 4-hour demand zone, right, I would like to go down to the 15-minute time frame to look for my entries, right? So this is where you can really see the entry model that I've been showing you guys so far, right? So let's just use this one first. So over here, 15-minute time frame, what happened was that price turned bullish to facilitate the internal pullback, right? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then over here, okay, let's just place price back a little bit. Okay, one step at a time. Okay, so based on this alone, right? If I were to see what price was doing right here, price has created a break of structure to the upside right there. Okay, cool. And then based on this, this is the last high that we have right here. We are pretty much playing within this range right here. Okay, if you look at this right here, this internal high low is actually quite far away, but this could be the fractal low, right? This is the fractal low. If you look at this on a 4 time frame, I believe that's a fractal low. Yeah, we can see this is something of a fractal low right there. So we can expect this one to get taken out first, right, to give us our fractal market shift. You can see right now, price comes down here, give us our fractal market shift right there, right, break past this. That is when we can anticipate price start pulling back to where? This supply zone that actually created this market shift. So there is actually a supply zone right here at this extreme end right there, and there's also a supply zone right here. Now once again, completely up to you on which one you want to enter on, right? Let's say we choose to enter on the edge of the zone at this extreme zone right now, and place our stop loss above the zone. I'll just enter on this extreme end. Okay, you can see price starts pulling back. Okay, potentially tap us into the trade right there. Okay, not really, very, very close, very, very close. Okay, do we get them in or not? Okay, it seems like price went to, yeah, you can see this is a refined range. This could be the entire range. You can see price, you can place your order right there. Price step you into the trade, and right now you're into the trade. Once again, I'll leave it up to you to decide whether you want to refine it to a single pivot candle or this entire range, right? So in this case, price step into this entire range and then go down even further. And also, there's also another supply range right here, right? Over here, doing this consolidation as well. Okay, so cool. And then price goes down even further, and yeah, you can expect price to break structure. Yeah, you can see this was actually the market shift. This was just a fractal market shift, and then this was the official market shift where price goes down there, right? Break past it, and then come back up there to actually pull back to this zone that we have right here, and then go. So now you can expect price to create that lower low, lower high on the bearish market structure and just continue to, yeah, just continue collapse. Alright, so yeah, that's really the art of the market. You can see it just keep on going on and on and on every single day, non-stop, right? There's a constant battle between supply and demand, like I mentioned. So yeah, like I said, my tip for you would be to just focus on what price is doing right now, right? When it comes to drawing the supply and demand zones, it can get a little bit complex and a little bit messy all over the place. You just need to focus on what price is doing right now. If price is within this price range, draw the supply and demand zones within that price range. Don't focus on drawing freaking supply and demand zones from like the dawn of time, since the start of the dawn of time. No, don't need to do that. Just need to focus on what price is doing right now. Look towards the left, find your blind spots, any sort of supply and demand zones in your way, mark them out, and just be careful of them. And also remember, these unmitigated zones act as reaction points to facilitate the pullback. Alright, yeah, so
If not, I'll see you in the next lesson. That's what he says a lot of. I'm ever pissed. That was super duper fucking boring, mate. On a scale of 1 to fucking interesting, that was a fucking 4 out of 10, mate. I. How long is this next one? Flip zones. Oh my goodness. I hate flip zones, but that's exactly why we need to go through this. And then we have flip zone walkthrough next, is it? Yeah. So we can start that next lesson.
Before we go through what are supply and demand flip zones, I'm just going to do a quick recap on what are your supply and demand institutional zones, right? Remember, our institutional zones, it has to break structure for it to be considered as a valid, strong, or institutional, whatever I like to call it, a strong zone, all right? So in this case, looking at this example on this supply zone, what happened is that price push up, pulls back, and then goes up there and breaks structure. Now when this happens, guess what? It leaves behind like a demand zone that we have right here. Okay, cool. And then later on, price comes down here, a lot of sellers come in, push price down, and eventually break past this demand zone and break past the last higher low in this swing structure. So when this happened, we get our market shift, and this also tells us that this demand zone, it failed, right? It failed to do its job. Because what happened was that if price were to do its job, price will come down here, react from this demand zone, right? Demand will step into the market and cause price to go up even further. But in this case, it failed to do its job, no reaction whatsoever. So that is when we know that, okay, supply has officially taken control of the market right now. So you can draw like a supply zone right here, because this is the supply zone that led to this market shift, that led to this break of structure. So now supply is in control. We want to be trading from our supply zones. So right now, after this market shift, I'm expecting price to start pulling back. And where is it going to pull back to? To our supply zone that we have on this extreme end. Mitigate it, and that is when you can potentially get your entry, right? So that's for supply zone. And then for your demand zones, it's basically price is in a bearish market structure just like this, and then eventually start to switch, right? Remember, nothing goes down forever and nothing goes up forever. Whatever goes up must eventually come down, and whatever goes down will eventually go up. So in this case, this selling momentum, this selling pressure was not able to continue, right? It ended somewhere right around here where demand stepped into the market, overpower supply. How do we know that it's overpowering supply? When price actually break past the last lower high, breaking structure, and also this supply zone failed to do its job to print that lower low. In that case, we know that demand has to control, and that is when we can expect price to pull back to the demand zone that created this market shift, right? And that is when you can get your entry. All right, so that's a quick recap on
My fucking problem. My fucking problem is that I try and sell from here when there's so much more demand still in control, or I try and buy from down here and I get swept even further. So that's a little thing that I need to improve on. But yeah, what I'm really gauging from these lessons so far is that our edge is based upon just more confirmations. Duh.
and demand institutional zones, right? You should be very familiar with that by now. And quite simply, flip zones are exactly the same. It's just that there is what we call a failed reaction. Alright, so let me just go through this example first, the supply scenario. So in this case, same thing, price push up and then pulls back and then goes up there and breaks structure. Now when this happens, remember we have our demand zone that is created because price broke structure, right? So right now this demand zone right here, and right now price pull back to this demand zone right here. Okay, remember, at this point of time, our expectation is that in this bullish market structure, price is going to continue creating higher highs and higher lows. So by right, price will react from this demand zone and continue going up, right, creating higher highs and higher lows. But in this case, what happened was that price did react from this demand zone, all right? It reacted from it. But then the next thing you know, it came down. It failed to break past this last high to create a new higher high. It failed to do that. So in that case, this is when a flip zone is formed, all right? So let me just quickly recap what I've just said. What happened right here is that price comes down here, tap into this demand zone, okay?
Holy shit, so flip zones. I already came up with this yesterday, but flip zones are S and D zones within ranges that has shifted or broken structure.
Step into the market, right? He stepped to the market and pushed price up. But then there was not enough demand, right? There was not enough buyers in the market for price to continue to go up even further, right? To continue to go up there and create that higher high where this this high is higher than the previous high. In this case, right here, since price did not break past this high, it created a lower high. Okay, at this point of time, this tells us that there is a failed reaction. All right, so this is what we call a failed reaction. When this reaction, it fails to create a higher high, right? It fails to break past this high. So in this case, this is when we have our flip zone. All right, our flip zone is formed when price gives us this failed.
Shit, failed reactions. Like counter internal breaker structures.
Which tell us that there was not
Failed reactions I always got confused with because like what is a failed reaction? Is that a failed reaction? Is that a failed reaction? You know, but yeah, that is the failed reaction apparently. The internal breaker structure which goes against the trend.
demand, so supply actually came into the market and overwhelmed demand. So this is when, ideally, for this failed reaction to be valid, right, I want to see a candlestick close below this low right here, right? Basically below this failed reaction line. I need to see that candlestick break past it and close below it for me to consider it as a valid failed reaction. And then that is when I can draw my flip zone from the bottom to the top of the reaction. Or you can refine it to a pivot candle, right? Like what we have went through for your supply and demand zones. So remember, a very strict criteria is that price must.
Failed reactions are so confusing because a failed reaction basically indicates that the market sentiment is the opposite of what it's doing right now. And so, yeah, failed reactions are very important.
Break the reaction point and close below it for it to be considered as a valid flip zone that we have right here. So in this case, okay, after this flip zone was formed, eventually went down here and break past the last higher low, giving us our market shift, which starts as a shift in structure. And then now we know that supply is in control, right? Now we know that officially price has shifted from bullish to bearish. And right now, this is when we can wait for price to pull back. And this time around, where it's going to pull back to? It's going to pull back to our flip zone that has been created right here, mitigate it, and then go down even further. And that's really how a flip zone is formed. Now, in this case, what we call this is a supply flip zone. Because what happened is that price flipped from demand to supply, right? So you can call it either demand to supply flip zone or just supply flip zone, right? Which is what I like to call it, keep it simple, right? So in this case, at the time of recording this, for me to constitute this as a valid flip zone, valid supply flip zone, I need to see price not only break and close below the reaction point, I also want to see it break structure. Which means, in this case right here, I want to see price actually comes down there and break past the last higher low, giving me the market shift. Then I can confirm that this is a supply flip zone. Now, why would I want to do that? Because what happens is that sometimes what price can potentially do is this, right? Price goes up, pulls back to this demand flip zone, right? It created like a failed reaction just like this, right? But there was still more buy orders within this demand zone itself that has yet to be filled, right? And then that is when price come down even lower, fill up all the remaining orders inside this demand zone, and then there was sufficient demand. There was enough demand and buyers that step into the market and actually cause price to go up even further, continue creating higher highs and higher lows. So, let me repeat myself. For me to constitute this as a valid supply flip zone, I need to see the candlestick not only break and close below the reaction point, but it must also break structure. It must also break past the last higher low. Now, when I get the break, when I get the market shift, I know that right now there's a shift in structure. Price has went from bullish to bearish. Supply is in control, and there's a demand to supply flip zone being formed right here, or rather supply flip zone. And now I can just wait for price to mitigate this supply flip zone, and then look for my entry and just short it all the way down there. All right, because this is when supply has overpowered demand, right, and that pretty much caused this demand zone to fail. Now, once again, nothing is 100% win rate in trading, which means these flip zones will not work all the time. Later on, you will learn some confluences that we can use to decide whether we want to take our trade at this flip zone or at this extreme zone, right? Because sometimes what can happen is that, remember, what created this flip zone right here was this supply zone, right? This supply zone actually led to price creating that break of structure. So in this scenario right here, we have two zones: the extreme supply zone that created this break of structure, and also this flip zone, supply flip zone, that created this break of structure. Now, sometimes what price can potentially do is that after it breaks structure just like this, it can neglect this flip zone and pull back all the way up here to the extreme zone and then go. That out, right? Like I said, nothing is ever 100% win rate in trading. Now, so if you compare these two zones, right, the institutional zones and this flip zone, this one is going to be higher probability because this one not only did it break structural, but it also caused a demand to supply flip. While this one, this supply zone just caused a break of structural and nothing else. This one caused a break of structure and it also caused your demand to supply to flip, right? So this is why a flip zone will be much more powerful than a normal supply or demand zone. All right, so if we look at the bullish example, in a demand flip zone just like this, price was creating lower highs, lower lows, lower highs, lower lows, and then price comes down, break structural, and we expect a supply zone to be formed right here. Now price goes up then, and then react from this supply zone, right? And if this supply zone were to do its job, price is gonna go down here and continue creating lower lows and lower highs. It's gonna print a lower low by breaking past this past low. But in this case, it did not do that, right? Price actually came down here, right? So the supply zone did kind of do its job a little bit, but it failed to follow through. And that is when we get that pivot in price where demand step into the market and overpower supply and cause price to push up and actually eventually break past the last lower high. Now, when this happens, right, remember, there was a failed reaction right here, right? And let me tell you something, this reaction is key. We need to have the reaction in order for us to consider this as a flip zone. Because if there's no reaction, that tells us that this supply zone did not work at all, right? So we need to get the reaction in price. Then we are able to get that pivot, and then we are able to determine that this is our flip zone. So that is why I say right here, price must react to supply zone for the flip zone to be valid. And then this is when this reaction, like I said, fails to create a lower low. So it fails to break through this last low and continue this bearish market structure. This is when we know that the sellers, they have lost their power. The sellers have lost their steam, right? They don't have enough power to push price down even further. So we know that demand step into the market, overpower supply, and right now we are about to go up. And then this is when you can draw your flip zone from the top of the reaction to the bottom of the reaction, or once again you can refine it to the pivot candle like what we have done, which could be like potentially right here. Right, we're going to go through some examples. And remember, for this to be a valid flip zone, the candlestick, it must close above, it must break and close above the reaction point. So it must break above this line right here, and it must close above this line, like what I've drawn right here. And then later on, it must also break structure. Price must actually go up there and break the last lower high, giving us a market shift for us to consider this is a valid flip zone. And then once that happens, guess what? A supply to demand flip zone is formed. So this is when you can either call it demand supply to demand flip zone or just demand flip zone. And then right now, after this market shift, we are expecting price to start pulling back. And where is it going to start pulling back? It's going to start pulling back to the demand flip zone that we have right here, and then pull back to this demand flip zone, right? Remember the range initiation, mitigation, and then this is when we fill up the remaining orders, and then we get a continuation in price where price goes up even further. All right, and yeah, that's basically your supply and demand flip zone. Now remember, the prerequisite is that there must be a reaction. Okay, we need to get that reaction, that failed reaction. We must have this failed reaction. If we don't have this failed reaction whatsoever, we cannot define that as a flip zone, because if you don't get that failed reaction, it's just a normal supply and demand zone, right? You can see the price come down here, right? There was no reaction whatsoever, there's no failed reaction whatsoever, it's just a straight push like this. In that case, this is just a normal supply zone. There is no flip zone whatsoever. For there to be a flip zone, there need to have a failed reaction. And then remember, we need to get the candlestick that break below this failed reaction line and close below it, and then get the shift in structure in price. Right, same thing right here. We need these three prerequisites for us to consider that as a valid flip zone. Because if you really think about the rationale behind flip zones and the logic behind it, right? What happens right here is that flip zone, it basically tells us that supply has flipped to demand or demand has flipped to supply. Supply has overwhelmed demand or demand has overwhelmed supply. So in this case right here, once again, just think about it from smart money's perspective, right? Let's say they goes up, push price down, and then break structure. Now it causes a lot of, it requires a lot of money to cause price to break this structure, right? Which means there's a lot of demand right here, right? This is where smart money entered, and yeah, they enter with large amount of orders. So we can expect there were some orders right here that has yet to be filled, right? And in this case, price pulls back after break structure and pull back to this demand zone. Okay, now at this point of time, we are expecting the remaining orders right here to be filled. Okay, so it did, right? It filled up these remaining orders, step into it, filled up these remaining orders, creating this reaction right here. But then there was not enough orders, there's not enough buying pressure, not enough buying momentum, not enough demand for price to go up even further and break past the last high to continue that high and high low. In that case, since we didn't have enough buying pressure, supply stepped into the market and caused price to go down. Supply, the sellers overwhelmed the buyers and took back control of the market, causing this demand to supply flip, causing this supply flip zone to form. And and now we can expect price to mitigate this supply flip zone, fill up the remaining sell orders that we have within this zone, and then go down even further. That's the rationale behind why flip zones work, right? I don't want you guys to just understand what are these things. I want you guys to understand the why behind it. Because when you can understand the why behind it, you know why they work and why they are powerful. And you're not just following random patterns on the charts, right? So yeah, this is basically how flip zones work. Let's look at some examples.
Examples.
Okay, over here I have two examples, one for each scenario. So in a supply flip zone, what happened is that price would potentially be creating higher highs and higher lows, basically the bullish market structure, and then break through this high, and then pull back, and then creating another higher high right here, right? This is less obvious, right? We didn't have like a very obvious pivot right here, but if you go down to the lower time frame, what all of these wicks represent is that price goes up, right? Came all the way down here before price goes up even further, and actually break past this last high with this candlestick right here. So this was the break of structure, very very hard to see, but yes, that was in fact a break of structure on the lower time frame, right? And then when this break of structure happened, guess what? We got our demand zone, all right? So right now, since price is the bullish market structure, we are expecting demand to hold and supply to fail. So our bullish expectational order flow is that price is going to come down here, react from this demand zone, and continue to go up there and create the higher high and higher low, right? Because right now we are bullish. But in this case, price did reacted from this demand zone, right? It came all the way up here. You can see this long wick right here. It came all the way up here.
I think another thing to take note of is how the order block is like the start of the zone, but then the previous high is like the end of it. So it's not just the order block, it's like the whole range that he seems to sort of recognize as his point of interest.
Before price comes down. Because remember, what happened is that right here, in order for this demand zone to do its job, price has to go up there and break past the last high that we have right here. In this case, that did not happen whatsoever. There was not enough demand. So price comes down, supply overwhelm demand, and eventually, right here, we get price breaking past the failed reaction line right here. So this is the reaction line, right? Right here, this is the reaction line. This is the line, this is the lowest point before price got pushed up there. So you can just draw this reaction line at like the lowest point before price got pushed all the way up there and comes down. And then remember the candlestick that break below this failed reaction line, it must close below it. So in this case, do we get a close below it? Yes, we do. And not only did this candlestick right here close below the failed reaction line, it also closed below the last higher low, right? It also closed below the last higher low, giving us our market shift. So yeah, this is really like the perfect scenario where we get the breakout candle, it closed below the failed reaction line, it also get that market shift. Now we know that supply is in control of price, so we can draw our supply flip zone from the bottom, right, the failed reaction line, all the way up here to the highest point of the reaction, and that is our entire supply flip zone. And right now, after this market shift happened, we are expecting price to pull back to this supply flip zone, and that is when we can look for our entry to short it down, right, to see that continuation in price. Now, on the other hand, on the demand flip zone, once again, it came from like a bearish market structure where price is just creating lower high, lower low, supply flip zone being formed right here, supply zone that caused this break of structure, right? And then price goes up there, right? You can see it mitigate this supply zone, right? So remember, the reaction is key. So we did get a reaction right here where price came all the way up here into the EQ of the zone, right? The equilibrium of the zone, and then fill up the remaining orders, remaining sell orders that we have within this supply zone, and it came all the way down here, right? So we get that reaction. But it was not strong enough for price to go all the way down there and break past the last low to create a lower low and lower high. And that is when we get demand stepping into the market and push price up. And you can see in this case, right here, this is not a valid failed reaction yet. I mean, this is not a valid close. Right? You can see the candlestick that break above the high, it did not close above it. So at this point of time, right, just looking at this, right, forget about this right here, just looking at this is not considered as a valid break of the reaction line. Remember, the candlestick must close above the reaction line. So this is when we still cannot determine that this is our flip zone yet, because what happens is that price can still come up there, right? Came all the way up here to this high and still go down even further. That could potentially happen as well. We need to get that candlestick close, right? That does that demand has really overwhelmed the supply, and we also need to get that shift in structure. Remember, so price goes up there, right? So come down here. Before price goes up, you can see this is where we get that candlestick close above the high of the reaction point. Right there. So this is when we got a valid failed reaction. And then luckily for us, the next candlestick, it actually closed above the last lower high, giving us our market shift, giving us our shift in structure, which tells us that your supply has officially flipped to demand. So this is where we can draw our supply to demand flip zone or demand flip zone. And then your job is to do what? Wait for price to pull back after the market shift, wait for price to pull back to the flip zone and look for your entry. As simple as that, ladies and gents. Now, let's go through one last example where we combine the multi-time frame concepts. And yeah, and then before we go on to the charts and actually look at this. Okay, I'm not going to spend too much time on this because I'm pretty sure that you are very familiar with this entire chart already. We have went through this like quite a few times in the multi-time frame structure lesson in mechanical market structure and also in the supply and demand concepts combined with multi-time frame. The only thing that's different here is that we have combined some sort of field reaction and flip zones, right? That's the only thing that's different. The rest of it pretty much look the same. All right, so let's go through step by step once again. So over here, price goes up there, right? And then it come up to some sort of unmitigated supply zone that we have on the left-hand side. Now, this is a daily supply zone, and in this case, price starts going down. Now, if this daily supply zone were to do its job, price is gonna, cause price to go down, create lower low and lower high, right? But in this case, it did not do that, right? Daily structure is bullish. It means price is creating higher highs, higher lows, higher lows. And in this case, we can expect this supply zone to pretty much fail, right? Because right now, bullish market structure means demand is in control of price. Now, and then price comes down here, react from this daily supply zone, and this is when price goes up and actually break past the last week high that we have on this bullish market structure. Now, this is where this is also considered as your supply to demand flip zone, because this demand zone caused this supply zone to fail and it actually breaks structure. So this is also considered as a demand flip zone. Yeah, so you can see in this case, we did in fact get a failed reaction, right? It's just that it's not as obvious as what we see like in this type of scenarios right here. So yeah, this is also considered as a flip zone. When we get a pivot in price, where price reacted from like a supply zone, and then it come down here, it failed to do its job where price failed to turn bearish and go down even further, and that is when we get our supply to demand flip zone or demand flip zone. Now in this case, our daily demand flip zone is formed right here, because it caused a supply to demand flip and it also caused price to break structure. So this is a strong zone, alright? And then next price goes up there, pull back on the internal structure, create a higher low before price goes up even further. And then once price mitigate the supply zone, right? And then that is when we can start expecting some sort of pullback to happen. Okay, so in this case, price starts pulling back, right? That means the 4-hour time frame, the medium time frame is going to start turning bearish first. We can see a fractal market shift before we see a market shift later on, right? And then price comes down here, come down to this 4-hour demand zone that was created when price actually break above the internal high like this, right? So this is the 4-hour demand zone, and you can see, remember, the reaction is key. We need to get the reaction. So we can see price did come down here, reacted from this demand zone, okay? But what happened is that this reaction, it fails to create higher high. It fails to break past the last high that we have right here. It fails to create higher high and higher low to continue this bullish market structure, which tells us that there was not enough demand, right? So we can expect kind of supply to kind of step into the market anytime soon. So that is when price comes up here, all the way up here, and then it starts going down and create that failed reaction in price, right? Remember, if this demand zone were to do its job, price will go up even further, but it failed. So when this happens, this is where we can draw our flip zone, our supply flip zone is formed, and this supply pretty much caused this demand to fail. So it was a demand to supply flip zone or just a supply flip zone. And then remember, this flip zone is only confirmed after we get that market shift, right? After price break structure. So you can see in this case, this was the last higher low on the internal structure. So I need to see that get taken out first. And then once price goes down there and take out that last internal higher low, now this is a valid supply flip zone. And now I'm expecting price to pull back to my supply flip zone, and that's when I can look for my sell position and trade this 4-hour counter trend, right? Trade this 4-hour pullback. Yeah, trade this 4-hour pullback. So yeah, this is when you can look for sell position right here, and then so on and so forth. We can see right here, price comes down there, creating another failed reaction. Cool, we get that supply zone right here. Remember, right now the 4-hour structure is bearish to facilitate that daily pullback, right? So now we can look for a sell position and you can trade all these supply zones, because we can expect these supply flip zones to continue holding, right? Since the 4-hour is bearish. So right here we got another failed reaction right here where price comes down to this demand zone and it failed and then goes down even further. Of course, we are expecting demand to fail because right now, remember, 4-hour structure is bearish. So we are expecting lots of supply flip zones to be formed, right? So in this case, there was supply flip zone formed right here, and we expect price to pull back there, look for a sell position, continue to play price all the way down here. But remember, like we have mentioned 1,000 times by now, if price get below that equilibrium in price and it start entering into the discount range, we need to be careful with trading this 4-hour pullback, right? We need to maybe potentially stop looking for our sell position and start looking for our buy position to trade the overall daily bullish swing structure. Now, price goes down even further, lower high, lower low, lower high, lower low, and then price eventually come down here and mitigate our extreme zone. Remember, this is our extreme demand zone, which caused supply to flip to demand, right? So this is the daily extreme demand zone, right? So this is really a strong zone. And then this is really the last line of defense for the daily bullish swing structure to continue. If price break through this last daily demand zone and break through this last daily swing low, then potentially we could have market shift and price is going to turn bearish right now. So this is where you can be a little bit more aggressive and look for your long setups, right? And then over here, demand step into the market, cause price to go up there before it come out to this 4-hour supply zone that was being created. Now, if this supply zone were to do its job, guess what? Price will continue go down even further, breaking past this last low and continue creating that lower low and lower high, but that did not happen. It created a reaction, and then it created a failed reaction right here where price actually failed to break past the last lower low, and now price went up there and break past the reaction line, giving us our failed reaction, and then later on it caused a market shift right here, right, giving us our shift in structure that tell us that
See, that's the confusing thing. Is that like when price comes down and fails to break past, you'd think this is like the failed reaction. But that failed reaction, that continuation, or that negation of the previous lower high is what the failed reaction is. That change, that shift in market sentiment is the failed reaction. Interesting.
pullback, this bearish
Hard to
structure
understand.
on 4-hour time frame is going to shift to bullish right now, and that is when we can look for our buy position. Okay, so right here, pretty much this reaction to this 4-hour supply fails to create lower low, like I mentioned right here, demand flip zone is formed, right? Supply to demand flip zone right there, and yeah, demand caused supply to fail and break structural, and then after price created this market shift, we're expecting price to start pulling back, right? So this is when you can potentially go down to the lower time frame, look for your entries, and you will see that on the lower time frame, the 15-minute structure is going to turn bearish first to facilitate that 4-hour pullback. Okay, so that is when price starts turning bearish for a short amount of time to facilitate that pullback, and eventually price comes down all the way down to our flip zone, right? Don't forget our flip zone right here. This flip zone was formed when price created a failed reaction, and it created that shift in structure that is present in the form of a market shift. Now price has pulled back all the way down here to our flip zone, and this is when we can look for our entry. Alright, so on the 15-minute time frame, what do we want to see? We want to see that shift in structure that tell us that this 15-minute, this 4-hour pullback is over. This 15-minute little bearish structure, whatever you like to call it, is over, and right now we're going to turn back bullish, and we're going to continue to go up right now. So we will only get that when price actually get that market shift. So this is the last lower high on the 15-minute time frame. Price comes down there, break structure, supply zone being formed right here, 15-minute supply zone, and you can see price comes up there, react from this 15-minute supply zone. Once again, failed to do its job. Now we got a supply to demand flip zone being formed right here on the 15-minute time frame. Now I'm waiting for price to pull back to my 15-minute demand flip zone, and that is when I can look for my entry. And this is really when this is the highest probability trade setup, right? This tells us that the 4-hour pullback is over. And right now, all the time frames, the 15-minute time frame, the 4-hour, and the daily time frame, all three time frames, they're all aligned to bullish to target our week daily high that we have right here. Right, remember our expectation was that price is gonna pull back to this extreme zone, and then eventually got there and break past the week high. So right now, since all the time frame are aligned right here, everything is bullish. This is really where you get the highest probability trade setup, where you can actually look to target this daily high that we have right here. All right. If not, then let's go on to the chart.
If not, then let's go on to the charts. I'll show you a walkthrough. Alright, that is revision done for today, mate. Some very boring stuff. What's it called? The flip zones were like the highlight. That's where we understood about failed reactions, and understanding what flip zones are, which are S&D zones within the ranges that have created a shift in structure or a breaker structure. I think that's the main takeaway for today. So we always like take something away from today, but generally there's a lot of like just boring stuff that we're going over as well, like that S&D with market structure, the walkthrough, man. Oh my goodness, that was like 45 minutes. I can't get back type shit. But yeah, man, we're just like hitting it hard. Rest of the day we're not trading. Unfortunately, I've just got to revise because I had such a bad week last week. I ended so badly that it's not even worth trading, I don't believe. I think we just need to be on top of our revision, be on top of our game, and then we can start like influencing people with actual like good trading, because currently like that's what it's all about. It's all about influence. Yeah, fuck the ego, man. Fuck the ego. Yeah, great, I want to be a fucking great trader and stuff, but there's no point showing people how to trade badly and then just fucking, like, regardless of my ego, influencing other people to trade badly as well and have a bad skill set. That's the worst situation. So we're just going over revision. I'm going to talk to my coaches about their portal so they can create whatever they need. for other people, and now we're just focused on building this system so that we can just build everything around trading. That's really what it's about. And as I say, trading is life. Life is trading. You know, you walk out your door, and you have to decide: do I wear a jumper? Do I not? Everything is a trade-off, mate. Life is trading. Trading is life. Do I want a sip of this coffee? Yes, I do. Okay, I'm gonna fucking sell. Right. So, on that note, have a fucking beautiful rest of your fucking day and your week. Today is hump day. It's Wednesday, and we're in London session right now. So, just enjoy the rest of your day. I'm going to speak to my coaches, and we will be speaking on Discord too. Mate, fucking just keep being bosses. Yeah, one love, peace and prosperity. Let's speak soon.